Thank you for joining the Merkle Science Reg Watch series this evening. Tonight, we are exploring regulating DeFi with some of the industry's leaders. The panel will discuss whether it is possible to foster innovation, manage risk, and protect consumers on the financial frontier. A little bit of housekeeping before we start. Participants should feel free to place their questions in the chat section of the Zoom webinar, with which we're all familiar by now, I'm sure. We'll try and manage those questions as we go, and we'll certainly leave a little time at the end of the session to answer them if we can. I am delighted to welcome our moderator, Sandra Rowe, CEO of Global Blockchain Business Council, the leading global industry association for the blockchain technology ecosystem, which does fantastic work developing the next trillion-dollar industry through education, advocacy, and partnership. Sandra, thank you so much for joining us. We're looking forward to the conversation. I'll pass the baton to you and you can start the session.
Thank you so much to Natalie and Merkle Science team all around. Appreciate the opportunity. Glad to be here, greeting you from New York. And I've got a wonderful cast here who are going to talk about not only DeFi, but really some subtopics that are critical to the conversation. And as we dive in, let's start off with the positive. What is it about DeFi that makes it so exciting and frankly has captured the attention of not just the crypto community, but much more than that? So I want to kick off with Jai, who is actually today, we have a very special day because you've started a new role. So Jai, please tell us a little bit about that and then also what excites you about DeFi.
Sure. Thanks, Sandra. Yes, today I just joined A16Z as their Chief Regulatory Officer. Before this, I'm coming from the Celo blockchain or the Celo project. I was the Chief Risk and Compliance Officer at the C Labs for the past couple of years. And I have before that experience in financial services as well as the government. So thank you for inviting me to speak here. So what excites me about DeFi? I think that the most interesting thing about DeFi is, we hear a lot about disintermediation and what that means. But when you really kind of break that apart, what DeFi makes available or has the potential to make available to ordinary people are the same tools that have been available to companies, to high net worth individuals. In other words, access to capital markets and a choice in the types of instruments you can use to finance a small business or save money or get a mortgage. We're not there yet. And there's a lot, as we'll talk about today, there's a lot that needs to happen before we get there. But I think that potential of leveraging this technology to provide a set of tools that really were the thing that wealthy people could use is actually quite interesting, exciting, if we can overcome some of the issues that we're all going to talk about today.
Fantastic. And over to you, Jason, a quick intro and obviously your thoughts on what makes DeFi so exciting.
Yeah, hi, everyone. Thank you, Sandra, and thanks for having me today. I'm Jason Algrante. I'm the Chief Legal and Compliance Officer at Fireblocks. I've been there for about a year in this role now, and I have a background in traditional financial services, actually. So, what really interests me about DeFi, and I do come at this kind of from an institutional perspective, right, is I think, potential for this technology to lead to a new and widespread adoption by institutions of digital asset technology. We've already seen this at Fireblocks in the traditional financial institution space, but I think what I have in mind is a bit broader. So kind of the way I look at that and assess it, right, is basically across three vectors. And it's basically, what would you need to take a business, any business, and make it attractive to transition it over to a digital asset business, right? I think the first thing you would need is the ability to create and store value on a blockchain, or to transition existing value, right, in the traditional world over to a digital asset representation. So we've got stable coins, Bitcoins, NFTs now, right, that are able to do all those things. The second thing I think about is infrastructure, right? Obviously, I'm coming from Fireblocks. We have thoughts on the secure storage, management, administration of digital assets, but I think it's fair to say that the market now has in place really viable solutions and infrastructure. The third thing that I think has been missing from my perspective, right, is that killer app or that use case. And I think with DeFi, for the first time, we have that use case for corporates, broadly speaking, right? So if I'm a treasurer sitting around thinking how to deploy my capital, looking at the traditional financial marketplaces, it's pretty bleak, right? Whereas with DeFi, there are lower costs, greater efficiencies, higher yields that are now available, and we are, on the cusp of delivering these protocols and deployments that are, targeted directly at corporates. So, for me, I'm super excited to see where this space goes and see if we have a wave of adoption.
We're going to talk a bit more about the protocols that are primed to help the traditional institutions out there that may be interested, but I'm going to go over to Vanessa. Vanessa also comes from traditional financial services, and we've known each other for quite a while when we were on the other side and now on this side of the fence. Little bit about your latest role, Vanessa, and your thoughts around what you find exciting about DeFi.
Sure. Thank you, Sandra. Hi, everyone. My name is Vanessa Grellet. I'm the head of portfolio growth at CoinFund. CoinFund is one of the earliest VCs in the blockchain space, started in 2015, investing in early stage companies, including in DeFi, NFTs, and infrastructure. Prior to that, I spent over 5 years at Consensus, working on the Ethereum blockchain. And prior to that, I was in financial services too. What excites me about DeFi is really the open source aspect of it, and more specifically, the composability. So what we mean by composability, it's the ability for applications and protocols to interact with one another in a permissionless way, meaning they're constantly talking to one another. They can leverage each other's codes and utility. And so this open source nature of DeFi is really something that gets me really excited, and makes us think that there are so many new applications and new projects that are going to be coming up.
Fantastic. And to the audience, again, if you have any questions throughout our discussion today, if you could please put your questions forth, we'll be happy to address them as we go along. But I'm going to take some of the things that you guys have said and really kind of put a state of affairs today. So we have something that I agree is truly exciting, open source. It democratizes access to capital. It unlocks so many different concepts around what is value, especially in a digital framework. However, having said that, when we look at traditional finance and the way many of us grew up in our early careers of gatekeepers, intermediaries, siloed access to information, it's almost the opposite world, right? In many ways. And it's a huge paradigm shift, not only in the technology, but in the mindset. And so when we see that happening now today, we can kind of understand why there are the frictions and some of the tensions that may be arising. Because for some people, I think a group of people, this is a very scary concept of all of a sudden, people can just interact and do financial transactions in a very open, yet secure, but open setting. So I would love to get your thoughts around, what do you see now as some of the risks to the thesis around DeFi? What should, as either an investor or an entrepreneur, should we be looking at as potential pitfalls and things to potentially be concerned about? I'd be happy to go back to Jai or Vanessa if you have a thought as well. And then obviously Jason.
Yeah, so I can start coming with one of the most obvious risks that we've seen more recently play out with the compound is the risk that the protocol gets hacked. Currently only Bitcoin and Ethereum have not been hacked, but other protocols and applications built on top can still be hacked. And given the automated nature of a lot of these projects, it takes some time to to find a solution and eventually to reimburse the people whose tokens were lost, if at all possible. So I think, as an investor coming in, we look at the technical strength of the teams, the auditors that they're going to be using, how much attention they're putting in security and security reviews. So I think that's one first sort of risk that I see, and that has immediate consequences and impact on investors.
Great. I would double down on what Vanessa said. I would add a couple more to the risk, and one is a sort of building on some of the thoughts earlier. One is that the cyber risks and the IT risks are actually harder to assess than people, I think, outside of the world will give it credit for. And the reason is the very composability that Vanessa raises, which is you can have protocols that are interacting with one another. And the risk, the IT risk may only manifest itself once some of those financial Legos, if you will, as we call it in the industry, get put together. And so that creates a complexity that I think is going to need to be grappled with and understood. So there's the immediate vulnerability, but then there's the sort of composability risk. The second one, which I don't think has been paid sufficient attention to, but will need to be, is privacy. I think that DeFi won't go mainstream without some privacy enhancing protocols, because the potential for front running, for all sorts of behavior that we take for granted where information is siloed, and where we can have controls over the types of behaviors or adverse behaviors that can affect and impact markets, are not the case when you've got a permissionless, open, transparent blockchain. And so I think that that's the second issue. And I don't think this can go mainstream or institutional without understanding how you sort of compose a privacy layer or some sort of privacy protections on top of it, which raises the third risk, which is we're already seeing the regulatory risks in a bunch of different areas. And I think that the tension between privacy and AML, but also privacy and potentially investor protections, a whole host of other things are really the things that are going to manifest itself. And I don't just say this out of self-interest because I'm a kind of regulatory lawyer by training, but to me, the long pole in the tent has always been the regulatory issues. I think that you get a bunch of smart engineers in a room, and maybe I'm saying this because I'm not an engineer and could never do this, but I sort of feel that some the kind of technical issues will be solved, but these kind of underlying issues in terms of regulation, how it applies to a decentralized and disintermediated world, I think are going to be the long pole in the tent going forward.
And Jason.
Yeah, a lot of great points were raised, and I think I can just build on some of those and bring this topic home. But I think from an operational perspective, there's no question that we have work to do and folks have work to do. Our CEO is a big fan of a Tesla that he has, and he loves to drive it around in autopilot, right? And he's not unaware of the risks when he does that, right? So he's very attentive to the road and the steering and all the rest. But he loves the promise of that technology, and I think he would, understanding that there are going to be some accidents along the way, I think he would want to see that developed. And I think the operational side, it's kind of we have to recognize there's just a lot of work to do in its early days. On the regulatory side, we take a great interest in that. My background is also in regulation. So at Fireblocks, we're thinking a lot about how can we put permissioning around these protocols. And we're spending a lot of time talking with legal and compliance departments of institutions who are interested in them. So I think that is a long road as well. And for me, if I could just, I guess, kind of add to this, right, is that the list of things, including the regulation and the operational issues, and the privacy issues, right, it can get long. And when you have something like DeFi where it is so destabilizing and there's so many entrenched interests, right, in having something like DeFi not come along, I worry that we never get out of the starting gate. So, that's kind of what I would add to the concerns.
Appreciate all of your comments. And I do want to stay on a little bit more of the risks and reg before we move on to solutions. and we also have a few questions here related to reg. DeFi activity is pseudonymous and international. What gives national regulators and lawmakers legitimacy to regulate DeFi? I think actually that's a big question within, it's a much bigger question around, whether you can actually regulate properly within confines of a given sovereign nation when this is so borderless. But before we get into that, I do want to ask the question around, let's say operationally, we get in all the various gaps that we currently have and we're able to solve for it technically. Regulation is still very likely to come in some form. And when we think about it being done at the sovereign level, it seems to be almost a fait accompli that that's the way it's going to be. Do you have any thoughts on that, particularly the lawyers in the room who, obviously you've seen this before, at least in a different form, but these conversations around things that are truly borderless, how do you regulate something as disruptive as DeFi? And Jason, Jai, back to you. I'll read like Vanessa.
From our perspective, yeah, sorry, I was just gonna jump in, Sandra. From our perspective, I don't think regulation per se is a problem, right? It's regulation that stifles innovation and that which doesn't make sense. I think the fact that market participants and service providers like Fireblocks and our customers are getting together and affirmatively saying, we're going to import KYC standards either from FATF directly or from a sovereign nation, and we're going to build a system that complies with these rules and regulations, right? Even though we don't have the regulation yet, I think that says that there is a desire in the market to operate within the bounds of the law. The question is, what should the law be here in a way that fosters innovation?
Great point, Jai.
Yeah, I think that regulation is necessarily national. We don't really have an international regulatory framework. We have organizations like FATF that try to implement standards that hopefully countries follow, and then with various sticks and carrots try to get countries to do that. But the reality is that this will be regulated nationally, and that's going to cause, I think, issues of harmonization, potentially of disparate impacts on how the technology develops, because one of the things about open source code is it can be developed anywhere and people can join anywhere. So I think there's going to have to be very careful thought around what kind of regulation fosters innovation, because the flip side of that is the innovation goes elsewhere. It doesn't disappear. You don't squelch it. It just goes elsewhere. And for countries that want to develop kind of this technology and kind of the Web3 promise that it brings with it, with values that comport with those kind of national systems, that dynamic becomes incredibly important, that you don't want to push this stuff offshore or underground or to other places. And I think that that's going to be the challenge going forward. The only other thing I would add to this mix is, look, I spent years at the Justice Department enforcing against AML laws. My career in the financial service sector did it too. But I think that regulators have to be really cautious about just importing things that were created for a world of financial intermediation into DeFi. And I think there needs to be a lot more care and thought put into allowing innovation to take place on the RegTech side so that we can, in a sense, leverage the real beauty of blockchain, the programmability of money, where you can program regulation and code regulation potentially into blockchains or into layer twos that sit on top of blockchains. And I think exploring that framework is going to become incredibly important for DeFi, because I think at the end of the day, just importing the system that we've created over the past 50 years is not going to work for a whole host of reasons we can get into, but I think it's going to prove incredibly challenging. Whereas leveraging the technology for its new use cases is going to be, I think, tremendously interesting for those who are in this space.
Jai, it's almost as if I paid you to say that, because that is exactly what we recently wrote to Senator Toomey as part of his request for proposals on crypto regulation. We've actually said that upping the compliance game, AKA RegTech, and using this technology for the benefit of regulators is a net win across the board for risk management and financial stability. So glad that you made that point.
If I could add one thing there, it's also going to require regulators to up their game, because the traditional skill set that regulators bring to the table of risks and controls is going to have to be supplemented with an understanding of code, of the kinds of issues we talked about, the complexity of code and things. And I think the regulators are going to have to, in a sense, also up their game in terms of the skill set that they're training and bringing into the regulatory agencies. And it's a challenge enough in the private sector, it's a challenge in the public sector, but I think that's going to be one additional thing that needs to be carefully thought about.
Absolutely. And Vanessa, you made an excellent point about hacking as a major issue right now. Lots of different groups of protocols have had their issues. There is a question here from the audience about what end users need to be worried about and what is the industry doing to address that? Where is the accountability, especially if you are a consumer? Where do you go if something goes wrong? It's not the same world as when, if you have a charge on your credit card that's not correct because someone stole it, you have someone to go to get potentially refund. So Vanessa, any thoughts on what the industry is doing?
Yeah, so as a recovering lawyer, I'll also try to combine an answer with the previous question. So it is true. So if you want to have direct access to DeFi protocols and you're trying to yield farm or lend your tokens, etc., if something goes wrong, there's no customer support number that you're going to call. So I understand from that standpoint that the regulators want to be able to find some accountability, but it's accountability against an open source protocol, right? So against tech algorithms. So the way we see it is that, DeFi and CeFi will combine, and you'll have a lot of intermediaries, which hopefully will be able to give access to the general public or informed investors to these DeFi returns, and then be the interface, the regulated interface with DeFi. Else, at this stage, what I say when people want to dive into DeFi is really look at sort of the blue chips of DeFi, look at where the communities are the largest, where there's reasonable returns. If you go on a DeFi platform that gives you 3,000% returns, that's the risk you're willing to take to get that return, right? So I think really being careful and really reading up and getting informed about the various opportunities is the way to go. Or use a CeFi platform like Coinbase or other intermediaries that can be there for you.
Thanks for that, Vanessa. And here's a curveball question. I don't know if it's a curveball, but it's an interesting question. How does the panel see the regulatory circle being capable of being squared? Interesting, circle and a square. If a truly DAO structure is implemented, and what does that mean for regulators? So we know in Wyoming, the state of Wyoming, they have actually passed a law or two related to DAOs. What are your thoughts at more of a federal or international level about how regulators are going to look at DAOs and the structures as they become more prevalent, and in the context of DeFi as well?
I'll take a crack at it. I'm not sure I have a great answer for the question, but I think it's an important one. I think the law works by, at least in the common law system, by analogy. And so I think that typically what people are going to look to, and you've seen this in Wyoming, you've seen this in other areas as well, to sort of analogies in general partnerships or other types of structures that are known to individuals. I think there's a danger in taking that road because a DAO is not a general partnership in the way we think about it. It's got fluctuating membership. It's got all sorts of challenges in that way. But I think in the first instance, you're going to see attempts along those lines to sort of fit it within construct. And I think ultimately there's going to have to be a recognition that there is something novel here, but it's probably incrementally novel. And another, I think, very large question is, where should regulation be placed? And I think this is really important because for a lot of these, you have protocol layers that are algorithms. And then you have applications that are built on top and that necessarily have individuals and business models associated with them. And I think that regulators are going to have to get comfortable with the fact that regulation will exist not at a protocol layer, but at sort of applications where there are applications and institutions. And that's traditionally where regulation has sat. That doesn't mean that there won't be a role for policing of code, but it will have to be through intermediaries. I think I saw a panel with some experts from the BIS who made this point, which is, you really can't regulate code if it's truly decentralized. But I think there'll be a lot of attempts to distinguish between things that are truly decentralized and that may not be decentralized, and where there are intermediaries of various sorts who have obligations. And I think that's going to be just a messy process. Unfortunately, I think that it's going to take some back and forth. There's going to be conversations, and there are going to be some hits and misses in that space. But I think that's kind of where the rubber meets the road.
Great points. And Jason, unless you have something to add to that, I have another question to ask you.
I just think it's worth making explicit, right, that one of the things that DeFi destabilizes is legal frameworks themselves, right? And I think, listening through this, the challenge is going to be, how do we categorize these protocols? How do we regulate them? I think probably some form of regulation is appropriate, as I said. Where we are now, which is trying to take existing frameworks and wrap them around DeFi, I don't think is working already, and I don't think it's going to work going forward. So the question is, where's the innovation going to come from in the legal and regulatory space, right? And thinking about what the future of law should look like here.
Yeah, absolutely. And not directly related to what we've been discussing, but it's adjacent. A lot of, particularly in the US recently, we've seen the sort of midnight, last minute jamming stuff in related to crypto into much larger, bigger hot button topic, infrastructure bill for one, rulemaking that's been made, and the crypto community overall has obviously stepped up and been more vocal. But there's a question here from the audience, which I think is, quite a legitimate one. What is the DeFi industry doing? How can the DeFi industry actually engage better to make sure that they don't get caught out as well in some of these sort of potentially hot button topics and get caught up in other laws or other things that are being pushed through? What can the DeFi industry do? Or is it really a crypto question, crypto industry question? Vanessa?
So I think, the most proactive thing they could do is really come together and propose standards and solutions for regulators, and also do a lot more explanation. I think the industry has not benefited from enough education with regulators and other stakeholders. And I think that's to its detriment. So I think really coming in with constructive solutions and that come from people who are shaping these protocols and who basically can propose some technical solutions too, I think would be hugely beneficial.
Jason, you had some thoughts.
So I think what Vanessa just said is absolutely essential. I think the attitude that we've created something that's ungovernable, unregulatable, come get us, is not the most productive posture ultimately, right? And so I would also love and encourage the industry to go out and talk to policymakers and lawmakers and get together with constructive solutions themselves. Mm-hmm. The other thing that we're seeing, at least at the institutional level, right, is, following various enforcement actions. I think certain folks are on notice at this point, right? And they're aware of what's going on, and they are actually taking steps proactively to structure, of course, institution-mediated products, but to structure these in ways that are compliant but with a DeFi component, right? Kind of like as the engine behind that compliance structure. So I think I think that's kind of like a short-term fix and something for people in the space to look at, but I think long-term Vanessa is right on.
So we are getting a lot of reg questions. Oh, Jai, please go ahead.
Just building on what Jason said, just piqued a thought. And in a lot of ways, the way financial services is regulated is partially through regulators, but major institutions do some unofficial regulating on their own, right? The standards that are passed through to money service businesses, for example, that have to get bank accounts are in a sense regulated by the financial institutions who are their service providers. And I think you're going to see some of this happen as there's more connectivity between the CeFi and the DeFi space, which is there's going to be a demand for products and channels that are more compliant. And so on some level, I think the market will address this as it comes together. But I second the thought that I think the DeFi industry should come forward with some proactive solutions because they know the technology the best. Regulators, as hard as they try, are not involved in this every day, and they don't see the rapidity with which this technology is developing. And so I do think that there's going to have to be somewhat of an acceptance to say, yep, we have some technical solutions, we're going to step up and offer them, without seeing that as somehow compromising the underlying promise of this technology, because I think there's still an undercurrent of that in the industry. That doesn't mean that it should be sort of total surveillance all the time. It doesn't mean that there needs to be just importing rules, but there are solutions to these problems, and we need to take that approach, I think, and figure out what those solutions are that are crypto native, DeFi native, but nonetheless address the concerns that are legitimate and that are out there.
I think you guys have all done an excellent job of getting us into the next subtopic, which is really how do we form the bridges between traditional existing infrastructure frameworks and DeFi and the innovation and maintaining the innovation that it obviously holds for potential opportunities and economic growth. So one is building bridges, obviously, from a regulatory standpoint, but Jason, I think you had an example of how you're seeing institutions and then yourselves building those bridges as well from more of an operations standpoint.
Yeah, let's maybe just go over a use case, right? Because we've recently introduced a partnership with Aave to introduce an institution-focused deployment of the protocol called ARC. And I think bridge is the perfect word. I think that's exactly what we view our role as doing here, right? So in order for the institutional customers to take the first step onto that bridge and get across it, right, they have to know that they're going to be in a safe place on the other side. That's where the concept of permissioning the access to the protocol comes in. And then I think the other thing that's really interesting, right, is to say that, here we're bringing institutions to the space. Fireblocks is, corporate itself, right? But we are having to go to Aave governance. We're having to go to Aave governance, and we're going to have to already, we've put out a proposal to them. They've had the opportunity to vote on it. We've received comments on that proposal. And we're going to respond to every single one of them because we understand already that we have to have the support of the community to go forward with this, proposal, right? So, so there are elements to this that are unlike any kind of corporate business deal I've ever been involved in before, and those are, absolutely DeFi sort of elements. So that's what our experience has been, kind of working through this in this particular deployment.
Fantastic. And Vanessa, when you look at your investments in some of these protocols and how you think about where there can be bridges built across to traditional institutions, where do you see that progress? Do you feel like we're moving towards allowing traditional institutions to be able to participate in DeFi in a compliant manner? Or do you still think we have a lot of work to do?
I think there has been an acceleration, right? Especially in the past year, where the returns overall in DeFi and yields are eye-popping for any traditional investor in this current market with zero rates. I think there is definitely a huge interest. I think solutions like Aave's Arc, MetaMask Institutional will definitely bridge that gap. And I think will give a lot of comfort to the institutions themselves who are licensed and have to, respond to the regulators about their activity, that they have the right safeguards and that they're engaging in DeFi in a compliant way. So I think we'll see more of that in the future. And I'm quite bullish on that.
And Jai, it'd be great to get your thoughts. Appreciate that, Vanessa. And Jason, thank you for the use case. It's always good to have specific examples to point to. But Jai, there's a question for you as well. You can hopefully layer in, which is defining the AML concerns in DeFi. How do we build that bridge when we know we've got AML, KYC compliance that will need to be addressed in DeFi? So if you could also answer that.
Sure, I'll do sort of in part A and part B. I'll just have, I think what Vanessa and Jason have said I agree with wholeheartedly. I'd add one more twist to it only, which is I saw this morning an announcement that R3 was going to be building a permissionless instance of their blockchain, which was interesting to me because I think there's going to be a push and pull from the institutional side and also from the DeFi side. And I think you're going to see a similar migration that you saw in the internet, that you saw in cloud computing, which is we're all talking about hybrid now. But I think it's going to be more complex than that. With the internet, we started off with corporate intranets as people became comfortable with what it meant to have an openless, build on top of an open and permissionless system, until they were ready for full migration to the internet, if you will. Cloud computing, very similarly. I think a lot of banks started testing out hybrid environments. The bank I work for, Capital One, went all in on the cloud early on. And now you're seeing increasing migration away from hybrid to the cloud. And I think you're going to see something very similar here, which is hybrid is the comfort zone. But I think as the technologies improve on the, particularly the governance and the kind of ability to program in some of these concerns into the blockchain, permissionless, in my view, if you want a prediction, will take over because it's more efficient. There's benefits to open source communities that don't come with permission networks, but it's going to take time to have that migration. But I see something very similar happening in this space. In terms of the AML concerns, look, the AML concerns are bad guys and money launderers use the same typologies they've used forever. There's layering, there's we may call them peeling chains, but it's layering. We may call it something else, but there's a way that you exploit these systems to hide your tracks. It's a little bit more difficult with traditional blockchains, as I'll call them, like Bitcoin, because everything is transparent and you can see the movement of the money, which actually aids in AML and anti-money laundering investigations. But DeFi introduces one complication, which is smart contracts end up serving a function very similar to mixers. And if you're not familiar with those in the industry, it's basically a way of throwing all coins into a mixer, and then it's hard to know where the money came from, where it went to. And smart contracts act kind of like mixers, not intentionally so. They have a completely different purpose. And so forensic techniques have to develop where you can, in a sense, use blockchain traceability despite smart contracts. And I think there are some advances being made in that area as well. There's always an offense and a defense here, and a chicken and the egg problem. And so I think you're always going to have that, but there have been advances made. And I think as you think about building out compliance layers on top of some of these DeFi protocols, there's also going to have to be a change on the regulatory side, which is, there's a discomfort right now amongst regulators in the AML space of reusing KYC. But if I can get a reliable identity, tokenize that identity, and allow it to travel along with the transaction, should they be so worried? And are there ways that you can allow the spirit of AML to live on in a completely different environment? And by the way, that's going to solve some problems on the internet, where I think the permissionless nature and the sort of anonymous nature of the internet itself has raised issues. So I think there's going to be a convergence of the way the internet is architected and blockchains are architected as we arrive in Web3 that'll make some of these things possible, but I think there's a long way to go.
Absolutely. And by the way, to add on to that, it's not just about individual KYC AML, it's actually at the institutional level as well. If you've gone through as an institution full-blown identity and AML compliance with one market infrastructure, for example, or a bank, why can't you take that same information and have it applied to the other 3 or 4 or 5 accounts that you need to also open with different institutions? Why does it have to be a separate individual process that's just basically redundant with a couple tweaks? That efficiency layer alone would help remove a lot of the frictions that we have around at the institutional level. So I'm glad you've raised that point, because frankly, you can make it short-lived, meaning you're approved for a certain period of time, but maybe every year there's a review where that identity layer has to be updated and then verified again. There are lots of different ways to do this. And so I think the innovation is yet to come. So appreciate, Jai, that you've mentioned that. Jason and Vanessa, do you have any other thoughts around the identity layer piece and the compliance piece around applying that to DeFi?
I think the challenge here is, the compliance of your status over time, right? And whether that can be passed along, and how do we ensure that, the first entity that gave not the authorization, but agreed to the status, like maintains that. So I think there are really a lot of challenges there, even though now the technology allows you to do things differently.
Agreed. Jason, any thoughts? Otherwise, we'll move on to decentralization.
Yeah, no, we're aware of the identity technology concept and are hugely supportive. We look forward to seeing where it goes.
Great. Okay, so a question that we have is around decentralization and whether DeFi is truly decentralized or not. And when we're talking about bridges, and we've already, you guys have already alluded to the term hybrid. In some ways, there's got to be compromises made, especially within a regulatory framework. There was an interesting question on top of that related to inclusion. So there are those who say that DeFi democratizes access. However, is it really user-friendly? This person here is intimating that it's actually not user-friendly and that you do need to be crypto savvy in order to be able to utilize DeFi. Any thoughts around that?
Yeah.
There's definitely truth to this perception. Anyone who has opened a wallet in the space knows the challenges, and you don't need to be a developer to use DeFi, but you do need to be informed. So, and I think that's actually a good thing at this stage, given how nascent it is, because if anyone could just click a button and have access and take on risk without any filter, I think that would be an issue. And I think that's why, it's still, it doesn't have any worldwide implications for the time being. But if you think of something like the DM project and their wallet, and once that's switched on, 2 billion people have access to that. What are the implications? So I think, yes, right now DeFi, has some limited sort of audience. And I think in the future that will change. So we need to also accompany that change and make sure that the risks are well thought after.
Yeah, and I think that it's the issue that crypto faces even today, which is it is for an audience that understands some of this stuff. Not exclusively, it's becoming a little bit more mainstream, but you use a MetaMask wallet, you have to know how to do certain things in it. It's not sort of plug and play. The project I just left, Cello, was focused on this very problem, which is how do you make things usable? And just on the sort of transfer of value side, one of the innovations of that platform was to use a Venmo-like scheme where you can use your cell phone number. You don't need to use sort of hexadecimal strings of identifiers. And I know there's work being done in DeFi space as well to get us there. But I think that that's going to take, engineering for sure to make sure these user interfaces are good, but it will also take disclosures so that as it becomes more mainstream, people understand the risks that they're getting into. I think one of the advantages today is that the people who are engaged in this trading are really crypto native people who understand, not universally, there obviously are going to be cases that aren't the case, but if you look at the sort of subset of people working in this area and doing this, they're people who understand the risks. And so when they get affected or impacted, they may be surprised, but they're not shocked that something like this has happened. And I think as this goes more mainstream, really trying to understand and get that knowledge out so that there's an awareness will be important. But I tend to agree we're not quite there immediately.
And Jason, any thoughts on that? Perhaps it is for the time being a good thing that it takes a little bit of effort to actually engage on the DeFi side.
Yeah, I mean, from a retail or individual personal level, at Fireblocks we don't deal with that use case, right? So frequently, but I think from my perspective, part of what makes this such an interesting and vibrant space, right, and the community so interesting and active, is just kind of listening to the remarks that have come before, right? Is we have always had this tension in the community around kind of the founding principles of crypto, and then kind of as we go towards the mainstream adoption of crypto, what are we losing? What are we giving up? What are the trade-offs that are being made? So
right.
Maybe right now DeFi for the individual user is a little bit closer towards its founding principles, right? And also maybe a little bit harder to use, and maybe as we've concluded, that's just as it should be.
Right. And actually, this is a great segue into our next subtopic, which is around the consumer. And even though you guys may not always deal with the retail consumer side, there are definitely implications as more and more people come into the space and start getting comfortable using tokens and various digital assets. How do we safeguard against bad actors, and how do we help the consumer be better educated, more protected against what will naturally be, certain element of bad actors coming into play, or things that just go wrong, let's face it, that happens as well. So Vanessa, have you any thoughts around some of, as the user base grows over time? I believe the last count was 220 million crypto users around the world now is an estimate that's out there. When we get to 500 million to 1 billion, what does that look like? And what things do entrepreneurs need to think about?
So I would look at what the NFT space is doing right now, because that's where we really see mainstream adoption of consumers. And so trying to think, what's the playbook for NFTs, and where sort of regulation or the government can sort of step in and help consumers understand, what they're buying. Because in the NFT space, and not to change the subject, but the NFT space, you have collectibles, you have art, you have other things that people exchange, and those things have value. They're not financial instruments. So what are they, and how do we protect the consumer? So I think we'll see the playbook of the consumer protection play out in the NFT space more so than the DeFi space, except maybe for things like, if you get 4% return and things like that. But I think I would look to that to understand what can be done. Obviously, there are some frauds, and there's no need to create additional regulation for that. That's something that's already taken care of. But see how the regulator can intervene in a digital world. So we're moving to the metaverse. People are engaging there. They're buying things. They're showing up in the world in the metaverse, and they're creating value there. And so how do you ensure that people are aware of the issues and dangers?
Great example. There is a lot going on in the NFT space, and eventually NFT, DeFi also converge at certain levels. So no shortage of interesting activity and innovation for sure. Jai and Jason, do you have any other additional thoughts on consumers as we grow the user base? What does that look like, and how do we as an industry ensure protection or at least safeguards for that?
I think one of the things that we're going to struggle with for a little while is how do you take a disclosure-based regime? And again, just as we've had challenges creating a system of regulation which applies to intermediaries and bringing it into the kind of disintermediated world, the other challenge is bringing a disclosure-based regime onto the blockchain. What does it look like? It's going to look a little bit different than it is in a world of siloed information, of large information asymmetries. And the question is, in a blockchain-based world where at least technically and theoretically everything is open and can be audited and you can understand the risks, what is the role of regulation to ensure that that becomes kind of usable, readable, without turning it into your credit card disclosure statement? If we went in that direction, I think it would be a tremendous mistake. And if we conversely said that this space basically is only open to accredited investors, I think we'll miss a tremendous opportunity, because accredited investors have all the tools they need to manage their wealth and to create wealth. And so the question is, how do you get a true disclosure-based regime in a way that benefits people, allows them to take risks that they're entitled to take to build their wealth? And I think that we're not there yet. I think that the things that I've seen are still trying to create a model that has existed onto something where maybe some more innovative thinking is required.
Jason, any thoughts?
I mean, for me, and from my perspective at Fireblocks, right, hybrid models, institutional models, where the protocols, the DeFi is accessed through an intermediary with the assistance of one, right, is a quick way to know who to complain to and how to get your money back. So I don't see that, at least in the intermediate term, as a bad trend. I see it as a very good one, in fact. And then, I think the other thing just to kind of observe, right, is then to say, well, let's talk at a pure retail level, and let's say a direct interaction with these protocols is another one of the just fascinating aspects of this space is we're running a live experiment on governance. Right. Yep. And we are seeing that, play out in the news right now. We we can try to analogize to some other situation, but at the end of the day, that's what we're doing. We're running an experiment at a broad level on governance, and it is fascinating to watch.
Absolutely. You make an excellent point there. And we have a couple more questions. A lot of these have been very reg focused for good reason. There's one before we move on from the consumer. There's one related to the role of KYC and consumer protection. Does the current KYC regime or rules around know your client, for those who are not familiar, really protect the consumer, or could it actually have an opposite effect, particularly in the DeFi and decentralized space?
Yeah, I mean, look, the purpose of customer due diligence and KYC is not consumer protection. It's to aid law enforcement. Well, let me take that back. It's potentially a derivative of consumer protection in the sense that it's an after the fact mechanism designed to make sure that there's sufficient evidence to pursue law enforcement investigation when something bad happens, when a bad actor launders money or engages in fraud or other types of criminal activity. So its primary purpose is not to protect the consumer, although after the fact, it can help law enforcement do some of that. And I think that there is a tension ultimately, and this has been known within the industry for some time, between access to the financial system and the types of regulations required to collect information. And I think that one of the real open questions is, are there novel ways to approach this? In many ways, I think the fraud space has been more innovative in terms of identity verification than the AML space. There's sort of not a premium put anymore on self-declared identity as much as behavioral identity. And the question is whether there are other indicia of identity that can help populations, whether it's refugee populations who are not going to have IDs, or populations in some parts of the world where the types of ID verification that we're used to in the West, and that's very natural, is going to be very hard. Maybe there are other types of identification, particularly with on-chain data, with circles of trust that have been used in communities around the world that can now be brought onto the blockchain, and maybe it can be used as additional identity. But there is a tension that has to be acknowledged, I think, between financial inclusion and AML. And I think it's notable that, at least in the US, the new AML law that was passed in December of 2020, in fact, requires now FinCEN and financial regulators to look at impacts on financial inclusion. So there's an acknowledgement that there is a tension here. And again, maybe I'm an optimist, but I'm hoping that some of the technologies that we have, although we're not there yet, can maybe square the circle in this area, because we haven't done a great job of it, I think, historically.
Yeah, agree. Right there with you. I hope we do innovate in certain categories. Vanessa, any thoughts before we?
Overall, so yes, I agree with Jay on the two different functions of AML and consumer protection. I think the issue that we see is now consumer, investor, everything gets blended. I'm still on the NFT side, but so there's an opportunity also for us to rethink, you know, what does solicitation mean? What does offering a product mean? And how the current legislation is able to capture all that digital experience. Mm-hmm. And I don't think that's the case. And I think, you know, the blockchain in the back end makes it even more challenging. So we need to also have some fresh ideas about proposals and what can be solutions for this new digital era.
Great. Jason, anything before we move on?
So I completely agree with the panel, and it was the first thing I would have said too, which is that the purpose of KYC AML is not consumer protection. What I would add, though, is kind of a question: is the fact that an institution is required to or does do KYC AML processes sort of a proxy for sophistication and or regulation of that institution? And is that in and of itself a kind of consumer protection good? So that's all I would add.
Good for thought. And I cannot believe this, but we are literally 4 minutes away from the top of the hour. So we've blown through nearly an hour. I don't know if Natalie, you have anything else you want to add, but I think we've addressed a lot of the questions that came from the audience. Thank you so much. I was thinking we could just have the lightning round now, which is to ask each of our esteemed panelists to give us their thoughts going into 2022. It can be an optimistic one. It can be a pessimistic one, though I think this group is fairly optimistic. Happy to start with Vanessa.
Yeah, so an exciting year ahead of us. We see a lot of projects coming in, innovating in DeFi on all layer one blockchains. So whether it's Ethereum or Solana or Celo or others, it's really an exciting time. People are being very creative in terms of putting the building blocks together and creating derivatives products, lending products, things that allow us to trade and to create yield. And at the end of the day, you know, if large institutions are able to invest in DeFi, you're going to see pension funds, you're going to see people who are investing for our retirees. So, you know, it's the entire sort of economy that would benefit from these returns and this innovation. So I want to, you know, make sure that this innovation has enough room to grow and scale and in a compliant way. And I think we'll see some exciting things this year.
Fantastic. Jai, Jason?
Sure, I'll go next. So this is a prediction completely off the wall, but I tend to think in a couple of different tracks. The first one is, I think the regulatory issues are real and will take years to work out. This is not a space that moves quickly. So I think on the regulatory side, it'll be messy for several years. There'll be sort of back and forth and some misfires. And, you know, we've seen some of that already, at least from the industry perspective. There may be not misfires from the regulatory perspective. That said, I actually think that what you're going to see is, with the increased institutional pressure, I won't say adoption yet, because I think institutions are testing the water, they aren't there yet. But I think that the institutional pressures are actually going to be something that provides a space for creative RegTech innovation in this space, because the institutions are going to be demanding it. And I think that RegTech innovation is going to, in a sense, outpace the regulatory developments, which will take much longer to work. And I think there'll be a convergence, if you will, of the innovation in the space. It would have been wonderful if the regulators can come out and say, this is what we want to see and innovate in that. But that's, I mean, practically speaking, that's not the way regulators work, and it's an unfair demand to make on regulators. But I think that pressure will come from the institutional side, and that's going to hopefully, I think, move the ball in this space, and maybe with some organic solutions that aren't imposed from outside, but are really developed within.
Fantastic. Jason, help us bring it home.
Yeah, I'll wrap it up. So listen, I agree with a lot of what the panel said. I think in 2022, we're going to see the ecosystem continue to evolve in really new and exciting ways. I think DeFi will be a big part of that. And I think these evolutions and innovations in what is possible, what can be done in the digital asset ecosystem will create demand from institutions to come on board and start using some of these new technologies. So that's what I look for in 2022. I think on the regulation front, I'm a little bit more optimistic. I think we'll start to have an idea of what it might look like, even if we don't have something comprehensive.
Well, thank you very much, the panelists, for your valuable insights. And we have a lot more to go, exciting things to look forward to in 2022. And I'm going to end and hand over to Natalie with this one point, which is we are just at the beginning. For those of you who think, I want to get into this, I'm interested, just get stuck into something you actually find interesting, and you may see that it leads you their paths. And there are a lot of things to look forward to, but I hope we actually democratize this opportunity set around the world, and we create value and wealth across geographies and dimensions, not just in a couple locations. And that's what I hope will happen over time.
Thanks very much, Sandra. And certainly want to echo what our panelists and moderator have said. Thank you very much to the audience for joining us today and providing really some great questions for the speakers to explore. And of course, a huge thank you to Sandra, Jason, Vanessa, and Jai for sharing your expertise and your opinions, I think, on topics that will certainly continue to drive debate, innovation, and some degree of regulation as the DeFi industry continues to grow. From the Merkle Science team, we'll ensure that everyone who registered for the event will receive a recording of the panel in due course. And I'd like to wish everyone an enjoyable end to your day. Thank you very much.